Hello, my name is Maya Sybil, and I am a reporter and content producer at fundoperator.com and insuranceinvestor.com. And today I am joined by Nenna Gilmour-Platt, who is the head of investment strategy at Just Group. And hi, Nenna, it is wonderful to have you here today.
Hi, thanks for having me.
Nenna will be speaking on day 2 of Private Markets Investor Europe 2023, which is on in London on the 29th of March, coming up. And she will be talking in an afternoon panel discussion on which asset classes and investment structures represent the best investment opportunity right now. Nenna, I'm just going to dive straight into the questions, and we'll kick it off. We'll begin broadly, but which asset classes and investment structures are the best opportunity for return in 2023, in your opinion, and why?
Yeah, sure. So we think inflation-linked assets are very attractive right now, whether that be through infrastructure projects where there's explicit inflation linkage of the cash flows, or through property assets, long lease income, for example, where there's also inflation linkage. Particularly where those projects have a social or green angle, we also think they are very attractive. Affordable housing, for example, or green buildings. Most of our liabilities are inflation linked, so it provides a good match as well from an AML perspective. And we also particularly like GBP assets. Investing in the UK aligns with our purpose, and we believe that if we can support the Treasury's agenda of building Britain back better, then that's a good thing to do.
Excellent. And given current macroeconomic conditions, which we know have been challenging, what do you see as the 2 most pressing concerns or challenges for private market investors right now?
So increasing inflation and interest rates, while they can increase returns for investors, they can also put pressure on the corporate margins of companies. So we need to be really careful that we're doing our fundamental credit due diligence and that we're being careful to test interest cover ratios or rent cover ratios, for example, before we enter into a deal. We also need to make sure that we're stress testing those in various different scenarios to make sure that debt service can be paid. So that's particularly important right now. We do work very closely with our asset manager partners on liquid assets, and we make sure that we get involved in the structuring of deals to make sure that we have those right protections up front.
Right, perfect. And then I'll take us nicely into our final question, which is just, are there any surprising areas in your view that have either seen growth or decline due to these recent market shifts and conditions?
So I think after the mini budget last year, there was a liquidity crisis, and we learned that pension funds, due to the denominator effect, became overweight illiquid assets. I think what was surprising was that where they then had to sell those liquid assets, either from funds or segregated accounts, was the type of assets that came to market, assets that we generally didn't think had any kind of secondary market. Those were good assets, high performing, and they came to the market at a good price, and they presented a good opportunity for investors like us.
Perfect. It's an exciting topic, and we can't wait to hear more at the event later this month. So as previously mentioned, Nenna will be speaking on day 2 of Private Markets Investor Europe 2023 on in London on the 29th of March, coming up. And she's going to be talking in an afternoon panel on which asset classes and investment structures currently represent the best investment opportunity in private markets. And you can find more information if you're interested on europe.privatemarketsinvestor.com. Again, wonderful to have you, Nenna, and thank you very much.
Thanks a lot for having me.